an interesting presentation. I don't know where you've been all along, that we didn't know these secrets. For me, I think the question is, the multilets, do you finance multilets? Because we also have properties where it was this one big house, but then it has outside buildings where like it's got a granny flat, another ancillary units, and then maybe the main house is actually divided into two, so you get like 4 tenants. So I just want to check and confirm whether the multilets is also financed by you guys. And then maybe the second one, just to add, because I heard that you don't really finance vacant land. I'm not sure if I got you correct, but if I want to build investment property that will be tenanted, you would then finance it, or would you not? Let's say I've already have like 3 properties that are investment properties besides my primary residence, but I've got this vacant land that I own, and I just want to develop it and make it another investment property. So you would finance that, or would you not? Thank you.
Thank you, Temba. Dad, you want to take the second one, vacant land, and I'll take the multi-let one.
Okay, vacant land. We do finance vacant land. We only finance 60%, and you need 40% deposit.
Comfortable, Temba? Okay. All right.
Zuzo, are you fine?
Yes, I'm fine.
Okay,
But
you're gonna take the
ask,
multiple tenants deal, right?
Why is that? Why do you finance 60%
on vacant
instead
land?
of? I'm not buying vacant land. I already have vacant land. It's owned 100% by me.
Yes.
All I want
is the building loan.
Develop it. It's the building loan.
So yeah, that's a little bit tricky, Dion, because what are you gonna be? Okay, we do finance building loans. Let me maybe put it that way. We finance building loans. It depends. You may need the deposit for a building loan. We may not finance 100% of that building loan. And when we finance the building loan, maybe give you a bit of information. We don't give you, like say you apply for a loan of 2 million to build, and then we're going to say, yes, 2 million, go do whatever. Doesn't work like that. We approve the loan. If it's been approved, there's certain documents that we need for a building loan, which is like your building plans, building contracts, and on the contract, there must be a start date and end date, and it must the duration to complete that building must be 9 months, and then we need an HBRC certificate from the builder. And then we need the quotations. Then we can do building your application. In terms of where we say maybe we're not going to give you 100% of that building loan, maybe we're going to give you 80%. Then your 20% must go into the project first before you start drawing from our equity. So we pay for completed work. As I said, we don't give you the 200,000 and say go and build and whatever. We pay on the work for the work that is completed. For example, if the contractor says he's going to dig foundations and then put the slabs and then you want X amount, then you'll complete the request for progress payment, take it to the nearest ABSA branch, then it will go to home loans. Home loans will send it to the valuer. The valuer will then maybe go out or whatever, and then do the calculation based on what is presented, and then he will authorize the payment up until the building is done. So the point I'm trying to make, we do building loans, but we're not going to give you the loan amount and say go build and that's it. We pay on stages that are completed. I hope I've answered you.
No, I understand.
Okay, thank you. Okay. But in terms of what you're going to be building, I'll rather not say anything because no, I can't comment on that.
Thank you, Dale. Okay, In terms of your question on multilets, unfortunately, we do not finance multilets, and that's based on the following factors that one needs to take into account. I think as a responsible lender, we've got to protect our consumer, our customer and their interests. And number two, the bank security risk that multilets presents. Now, obviously, you'll appreciate, right? There's a higher risk associated with multilets because it involves multiple tenants that you're actually putting into the property. Now, if those tenants decide to vacate that property, that's going to impact your rental income. And that's going to give you fluctuations in terms of potentially what income you earn on the property. So that's factor number one that you need to bear in mind. Number two, compliance and regulation. Right? The rules around multilets are more stringent in terms of regulations and licensing requirements. And there's also potential legal issues if that property has not been zoned well, if that property is built without the municipal approvals that's required. Number three, there's valuation challenges that's associated with multilets. I mean, finding value, right, based on the structural changes made to that property without the authorization from the municipality places a security risk for the bank in terms of financing that property, because no approved building plans normally exist for multilets, etc. Of the fourth thing to bear in mind, there's also limited resale market, right, in terms of multilets itself. And in terms of properties could be, in terms of the borrower defaults on the loan itself. How do you actually, peg a resale value in terms of that multiletted property? Because there's no active market in terms of, active sales around multilets itself. And I think the last point is from a concentration risk perspective, that's one of the variables that we use in terms of, assessing how much of risk that we were willing to take in a specific, area in terms of income, etc., in terms of the actual customers' financing options. So I hope I've given you a view as to, besides just saying no, the reasons why we don't actually do the financing of multilets. I hope that answers your question.
I get your answer, Dion, but I think you guys are actually missing out on a great avenue to actually finance properties, because I understand from the bank's view, perhaps the way you view risk is actually opposite to how we see it. Because, for example, I have a property in Durban. That property, for example, was bought for 900,000. The same property, if I were to rent a single tenant, I'm probably getting 9,000 out of it, and that's it. And at this stage, the same property, all I did, the zoning is correct, the plans have been approved, and in fact, you've got the occupancy certificate for the very same structure. We didn't even build outside of it. We used the same building, but we've created 8 units, meaning we just made each of the rooms, they were big enough. Like we've got like 35 squares each, because they were already like en-suited bathrooms in each. And the same building is giving us about 40,000 a month. And now from a risk perspective, I understand maybe from your view, but there's never a time where all the tenants are not going to pay, because the property is well maintained, it's brand new almost. But from the risk perspective, if I get one tenant to default 1 month, that is just 5,000 rands that they should be paying. And so if you look at it over a period of 12 months, it is unlikely that I'm going to get more than one tenant defaulting per month. So therefore, it drops my risk to nothing but like 10%. So I'm just saying, I think you at some point you need to re-evaluate and relook, especially in areas where the zoning allows. I know where people are just squeezing people in normal residential properties. That obviously poses a whole lot of risk, because that thing becomes completely illegal. But where the zoning allows and the plans are in place, that should then be something that you really have to look at, because for me, all I'm looking for now is to do the same, repeat the same process. If you gave me 1.5 million and I'm getting in 40-50,000 for the same property, that is, everything about it is complying. You then should reevaluate how you view your risk going forward. But whether it shifts from your department to another, that I don't know. But I'm just sharing with you my experience on the ground that this needs to be re-looked at. Yeah. Okay, thanks.
No, I appreciate that question and that view that you're sharing. I think in the midst of our next session, we should invite our colleagues from, credit risk to actually be part of it. I mean, and to, share their views as well as to how they see the risk portion, and elaborate even further. I've just covered the surface in terms of giving you the factors that taken into consideration. So maybe that's for another session. We can discuss that further.
Can I just come into that? Just a comment or something. What Zuzu have done, we do look on those, but it's not something that is normal. But because I know that there are properties I'm busy with one actually now, where a client was applying for an advance on it, and then there was multiple tenants, and then we asked for the zoning certificate, we asked for approved plans. The plans were there, but they just went out of the plans, so they're trying to fix that. But that was a further advance, not building from the scratch from that property. So in some cases, I think the problem is compliance, as Dionys mentioned, I think earlier. The problem is 9 out of 10, compliance is an issue. So where there is compliance, there is that leniency, but yeah, I'll leave it there.
Okay, thanks.
I knew that this question is going to come up, and I'm glad that someone who's more wise than me asked the question, and they gave you guys a lesson, because this is a real struggle between the financiers, which are the banks, and we also have a problem with the municipalities, because it seems like no one is willing, or no one has got the foresight of seeing what we as investors see. Because also with the municipalities,